everyone, I'm Karunya Rao, and in Ideas for Profit today we discuss the fundamentals of battery manufacturers. Both Amara Raja and Exide Industries remained resilient during the first wave of COVID-19 and they're expected to stay strong during the second wave as well, given the strong replacement demand. Now, demand concerns because of COVID-19 second wave have led to corrections in the stock prices of these stocks and companies. If you look at Amara Raja, the stock price is down 24% from 52-week high, while Exide stock price is down 12% from its respective 52-week high. We believe that this soft patch provides a good entry point with a long-term view. Of course, there are multiple factors as well helping battery manufacturers, but first, let's look at the Q4 FY21 performance. There's been significant pickup in demand for two-wheelers and passenger cars, as is evident from the monthly volumes and quarterly results of major OEMs. The rub-off impact, of course, was clearly visible in battery manufacturers' Q4 numbers as well. Amara Raja posted a strong 33% year-on-year growth in its top line that was driven by 50% volume growth in two-wheelers, 20% volume growth in cars, and 20% growth in the industrial segment. The aftermarket business continues to be robust with a 20-25% growth, and even Exide, meanwhile, posted a healthy YOY growth of 43% in sales, driven by strong growth in auto OEM sales, replacement demand, and robust demand from industrial segment as well, just like in case of Amara Raja. Though near-term outlook is impacted by the severe second wave of COVID, management has highlighted that demand is expected to bounce back sharply post the lifting of lockdowns across the various states. Now, two-wheelers and passenger car segments are expected to witness significant pent-up demand, just as they did last year post the lifting of lockdown. The management is quite upbeat about these segments. They've also indicated the fact that preference for personal mobility is something that will continue to be a key growth driver for the sector. Meanwhile, if you look at commercial vehicle segment, that's also catching up quite fast. In fact, the budget promised a huge increase in investment to revive economic growth, which could boost the CV sector demand further. Meanwhile, there's also government scrappage policy, which will also be a key driver for pickup in CV volumes. If you look at commercial segment, that is also witnessing significant traction as the economy is normalizing. And with the government's investment in these pockets, the ones that I just flagged off, the demand for batteries is expected to witness a strong uptick going forward. We expect demand in these segments to remain buoyant in the future as well. What continues to help battery manufacturers sail through the pandemic smoothly is the pickup in demand for replacement segment. Around 45% of the total revenue for both Amara Raja and Exide Industries comes from replacement demand. In Q4, Amara Raja saw a 20-25% growth in aftermarket. Exide also witnessed a strong double-digit growth in the automotive aftermarket revenue. If you look at lead, which is the key raw material for these companies, that saw a significant 5% price hike in the last quarter, which affected the company's operating profitability. So if this uptrend continues in lead prices, operating margins of these companies may remain under pressure. Amara Raja, however, has embarked on an outlay of 280 crores to carry out backward integration. It plans to set up a lead recycling unit with 1 lakh ton capacity. In fact, it's also setting up a solar power plant with a capacity of 50 megawatts with an outlay of 220 crores. All of these efforts are expected to save costs for the company from FY23 onward and is a long-term solution to rising raw material costs. Electric vehicles provide a fresh opportunity for battery manufacturers and they're working on a plan to manufacture EV batteries. Amara Raja is coming up with a 100 megawatt-hour lithium-ion battery plant in Andhra Pradesh to charge up its EV strategy. In fact, it has already launched its e-rickshaw battery and expects sales to pick up this fiscal. Amara Raja has also set up an advanced lithium technology research hub with a pilot plant facility for cell development project based on the technology transferred from ISRO. On the lithium-ion front, Exide continues to invest in its subsidiary Exide Energy. In fact, it has infused an additional sum of 40 crore rupees for an additional 2.56% stake. The stake raise continues to signal Exide's intent in developing lithium-ion batteries for the EV space. In terms of valuations, Amara Raja is now trading at 14.8 times of its FY23 projected earnings. Exide, meanwhile, is trading at 15.2 times of its FY23 projected earnings. Amara Raja is trading at an 18% discount, Exide at a 31% discount to its 5-year average valuation. Therefore, we advise investors to accumulate these stocks for the long-term horizon. Any weakness in the auto segment, of course, can adversely affect the financial performance of these companies. Furthermore, a rise in raw material prices and an adverse movement of the rupee against the dollar could also hurt operating profitability. So, of course, these are some key risks to watch out for.